Hello guys, welcome to another episode of Chat Time. This is episode 3 of our Chat Time program. Okay, but before we go into the Chat Time program, I just want to quickly ask you guys how was the week? Like our analysis last week, did it tally with exactly what happened in this week that just ended? And what we are going to analyze today in today's episode is it going to tally with the what with the week that's about to open tomorrow or next week? So how was the week, guys? And happy weekend. I hope we all enjoy week. So without wasting much time, let us go into the nitty-gritties of today's video, which is chat time episode 3. So I'll meet you guys in my other screen. Let's analyze together and let's see if we can make money. And for what happened last week, I believe we all can see everything. Everything is so clear to us. Like if you actually watch our last analysis, you should be able to determine if we analyzed correctly or not. So like I said earlier, without wasting much of our time, let's go into the today's topic of chat time. Meet you guys there. So welcome into my screen, guys. Welcome into my screen. You know how we do it, right? You know how we do it. Whenever we want to analyze um our new this thing, the first thing we analyze is the DXY, which is the dollar index. So once again, I welcome you guys into my screen. Welcome into my chat. All right. Welcome into my chat. So today I want to try as much as possible not to make this video really long. But before we even go further, I have a good news to tell you guys. And the good news to tell you guys is that today we are going to have much of pairs that we'll be analyzing, unlike last week. Like today, we have analysis on almost all our pairs. Almost all our pairs. So all I want you to do is to sit back, relax, together. Let's analyze this market. Let's break it down into pieces. Okay, so it will be easier for us. You and I can make money. Just as you can see, just by looking at our DXY chart, if you were with us in our last week chart time episode 2, this DXY chart you're looking at, you will know that okay, for those that actually followed what I said, are what they are in money by now. They are in money, even though like they've not fully hit our TP, but they are in money. So quick recap. Let me just quickly give you what we talked about last week. All right. Okay, let me zoom this very well so we all can see it clearly. Let me zoom it very well so we can all see it clearly. All right. So last week, last week we said that we have been in DXY trade since I think it's the beginning of this month, somewhere around here, and we've been in profit. So last week when we were analyzing, it was like we were in this pullback here, we were in this pullback, right? And I told those that analyze with me that okay, I don't think you should actually be scared of this pullback. It might be retracement that okay, this week that's about to open, that is this week that just ended, we might start seeing push up to the upside back. And indeed, we are seeing push up to the upside. So we don't have much thing to say on DXY. For today, we do not have much thing to see on DXY. All I just want to point out is that what we are making money. So the retracement we talked about last week was this, from the recent low to the recent high, because we are in an uptrend. So and this is it here. And what did we see? Currently, the trade just got to what, to the 100% level retracement. Of course, it has to happen because that was our recent resistance that happened after we've cleared this green bar. It is not even as if we've cleared the green bar. The green bar is still actually kind of disturbing us. Okay, so it is the green bar that stopped this trade from blowing to the upside in the first instance. It came back, now it is moving up, it's still around the green bar, and also what, hanging around the resistance. So it is currently hugging the resistance, and of course I'm expecting it to be like that. I'm not expecting it to just blow past that resistance just like that. It is not possible. Right? It is not possible. We need to see something like this. But one thing I just want to um pinpoint here is that what, our analysis is on fire. Like we are on point, and with the look of things, there's nothing that is actually stopping us from what, from hitting our full TP here, which is our a psychological level of 101.100. That is our full TP. And if you look at this minus 0.27, which I explained to you that it is an extension that we use to judge our full take profit when we are entering a trade based on retracement, just like this. Actually, if I wanted to add a new position to this DXY, after seeing this, I would have added it, but I'm not going to lie to you here. I just want to be sincere and and transparent as I can. I did not add any what extra position to this DXY. Anyway, I'm going to show you the one I actually added extra position, which I told you last week that I'll be adding extra position to that pair. And of course, I did when I saw what we analyzed. All right, when I saw what we analyzed, so I did add another position, but not to this DXY. So as we can see, we are now pointing back to the upside, and we are currently coming to our full TP, which is this major zone we are having here. This major zone we are having here. So in conclusion, not until DXY comes to this major zone before we will know exactly the next direction DXY wants to go. If it still wants to continue moving up, or what, or it is going to change character, excuse me, but at least it needs to come to this to this major zone, or somewhere around this 101.100 before we can determine our next move. So all you followers of MG4X, keep making money. I love you guys. That is all for DXY today. I already said that we don't have much thing to say. We already said most of the things last week. Another pair we have today. Let's move to another pair we have today, and that is going to be, all right. So USDCHF is another thing we are going to be analyzing today. Actually, I don't have much analysis on USDCHF yet, but I just feel like updating you guys what is currently happening on USDCHF. Like we said that USD, like DXY itself, is in a short-term bullish trend, right? So of course, any pair that has to do with USD being the base currency has to be trending in a bullish uptrend as well. So sometimes, like I think that was last, yeah, let me just say early of this month, I entered USDCHF buy, and this is what I saw, right? In this particular place here, let me zoom so you see very well. Okay, so this particular place here, we have the left shoulder. Okay, the USHF got to a major zone, of course. So and at the major zone, of course, you should be more careful there. So it's formed this left shoulder, head and right shoulder on the major zone. It is a no-brainer for me. I'm not going to let that go just like that. It's just like me wasting pips. All right. So to cut a long story short, I entered the trade somewhere after I saw the break and the test of the neckline just somewhere around here. Okay, let me be marking it out so you see very well. So after seeing the break and retest of the neckline, which is this break and the retest, actually I was not expecting the retest to be this deep, but market is always market and does not belong to anybody. So I saw this break and the retest. I entered the buy somewhere around here also on 4 hour. This is on daily time frame. So we have been in a nice and smooth, what can I even call it? Profits, not until we got to somewhere around this trend line here, and we just started seeing this pullback till we eventually hit our stop loss. That was quite painful, but market is always market, like I said, and we have market manipulations everywhere. So I did not analyze this pair last week, and because I told you guys there's nothing to analyze there for now. So but for today I have something we can actually talk about, and something we can be watching out for on this particular pair for next week or next 2 weeks, perhaps. This is what is happening. Let me take you guys to the weekly time frame, which is here. Weekly time frame here, you will see that as at this point here, we are having multiple rejections at this major zone. We had the first touch, second touch, first, second, third, and fourth touch on this major zone. That is telling us that this thing actually wants to blow up. Okay, plus another confluence that the DXY itself, which is the USD, is in a short-term bullish trend. That is two. Thirdly, we are seeing something like a double bottom chart pattern on a weekly time frame. One, plus the fact that it is on a major zone. You see the first leg, the second leg. This was a clear double bottom before we add these other two touches, but that does not invalidate this double bottom. Alright. So what I just concluded is that, and you see that after this market took us out in loss, that is absolutely fine, right? That is fine. Losses are part of the game. So you should always be ready to accept that. So after this market took us out with this last week bearish candle, what happened? I mean last 2 weeks bearish candle. You see this week that just ended, we had a full grown bullish and like bullish candle, not actually engulfing sha, but bullish candle, a fully grown bullish candle this week that just ended. You know, someone who actually saw these two candles should have been really, really pained that, oh, this market, why did you do this to me? When you know you are going to print this full bullish candle, why this red? But just like I said, market is always market, and market will always prove itself. All right, the market will always and always prove itself. So the market does prove itself to us, and that's fine. So here is my conclusion on USDCHF. For the fact that we are in a short-term bullish uptrend on DXY, which is the dollar index, my conclusion is that for me not to get trapped again in this market manipulation, I just marked out the neckline of this multiple rejection on weekly time frame. And if you do not forget, in our last analysis, I said something that whenever you see a chart pattern on a higher time frame, oh my God, don't sleep on it. Whenever you see a chart pattern on a higher time frame, especially it is now on a major zone, oh no, 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 that in fact that is what you have been waiting for since all this while. That is exactly what you have been waiting for. All right, that is what you have been waiting for. So don't you ever sleep on it, and that is what we are seeing here exactly. We are seeing multiple rejections on weekly time frame, which is a higher time frame. We are also seeing, let me go to monthly, let me see something on monthly. Okay, not really clear. So let's go back to weekly. Okay, we are also seeing something like a double bottom, a visible double bottom on weekly time frame, also on a major zone. What is are we waiting for? All I did was to mark out the neckline, which is this trend line we have here. I should just move it away, you see. So let me just put it there back. And now that we've identified the neckline, what do we need to do? All we need to do is to wait for the break and the retest of that neckline, then we should be very, very good to go. However, before you go, listen to this. Listen to this, because I'm not the type that will just give you trade setups and I will leave it to it. No, I do trade setups, and I also try my best to do trade management. Even though I will not be there with you personally while you are on the trade, that is why I will just try to give all the whole details that is going to guide you throughout the trade. You know, we are a swing trader, so every trade we take is like a journey, right? Like a journey. So now I already said that we have to wait for the break and the test of that neckline, right? So we have to see a break like this or like this, I don't know. Then a retest somewhere around there before we see something like this. So this bar here, up here, is going to mark our full take profit. Why do I say so? Why I say so is because I've been shouting it since that what DXY is in a short-term bullish uptrend. Not until it gets to that zone before we know the next movement for DXY. So now imagine that DXY got to that major zone and it changed character. Like it started retracing back, and you've picked your, let's say you've picked your full take profit because of a greediness to somewhere, not even this trend line, to somewhere to this next zone. Though normally and professionally our take profit is supposed to be at the next zone, but we need to trade professionally again. All right, we need to trade professionally again. So I'm telling it to you now that what you want to make your full, in fact, if this thing gets here, you will need a lot of volatility on this USDCHF, because the DXY has almost gotten to that zone, and anything can happen. But me personally, I pray and I hope DXY just continue its uptrend, so everything will just be juicy, right? So everything is going to be what's going to be juicy. So however, if we need a break, a retest, you have to make this black tiny bar here your first take profit, because that bar is there because we had a resistance zone there, right? Because we have a what? We have a something like a resistance zone there actually. That is why the black bar is there. So you have to make that black bar your what? Your first take profit. Then this other place should be your, what is it called? Your full take profit. So I hope it is very, very clear to you guys now. This is what we should be expecting on USDCHF. If you do not see this, do not enter. And what about our risk to reward? I'm a swing trader, and any trade that cannot give me at least a minimum of 1 to 3 risk to reward, I'm not entering it. No matter how good or perfect that trade might look, I am not entering it. And if the trade eventually move well, trust me, there is no any emotional conflict in me. And I'll be like, oh, is it because I'm looking for 1 issue 3 risk to reward? I would have entered this trade, I have taken this, I've taken that. No. Learn how to be disciplined. All right, learn how to be disciplined. Whenever you are entering a trade, know that you are entering a reasonable trade. All right, reasonable trade. So any trade that cannot give me 1 to 3 risks to reward, trust me, I am out. I am not entering. I need at least 1 ratio 3 risk to reward. So this is it. Like this is what we have on USDCHF. Okay, this is what we have on USDCHF. So what other one do I have for you guys here? Let me just check. All right. Hope you guys won't be surprised that today we are going to be having analysis on BTC. Like this is actually funny. Me myself, for over a month or about 2 months now, I said to myself, I don't even want to have anything to do with BTC. Like everywhere is just crazy, everywhere is just really, really crazy. I'm going to like quickly give you an insight on what is happening on BTC. And finally, yeah, we have one or two to say on Bitcoin, and this is it. Sometimes ago, around it is this year, of course, around April, yeah, I entered a BTC buy and I actually made over I think it was around $300 to $400 actually that I realized on this Bitcoin app. It was on my profile account, not my personal account. Okay, so this is what happened. Just simple technical analysis, simple technical analysis. All right. So this was what happened there. This was what I saw. So on weekly time frame, I discovered that we went for a retracement. If I just pick it from the recent low to the recent high, which was here then, not this place then. It was here then. I realized that BTC came for a what? For a huge retracement. Okay, it came for a huge retracement and it fell into our fib support level. Okay, this is our fib support level. I will explain what I call fib support and fib resistance level later, maybe in this video, but let's continue with this one. So when this trade got into our fib support level, it actually formed something that became more interesting to me. That actually made me feel like, okay, you know what, without an iota of doubt, I'm buying this BTC. I just go to daily before 4 hour. Let me go to that place first. Okay, this is on daily time frame actually. So this is the place. You can see I have this thing there safe, and there was a reason why I have it here. So I just scale down to the 4 hour where I actually execute my trades. I said the other day I execute trades on 4 hours. Okay, this is it here. You will see that on 4 hour we had a very clear double bottom pattern. Let me zoom out, or let me zoom in. I mean, we had a what? A very clear double bottom pattern. Alright. In fact, at first it was this pattern I saw. I never analyzed on the weekly time frame to know it is actually a retracement. I only saw this double bottom pattern on 4 hour time frame, and I was like, wow, this is a very clear thing, right? So this line that you can see there actually was what I used to mark the neckline of that double bottom actually. This is what I used to mark the neckline. That is why you can still see it there. And ever since then, I just left it there. You see, so we have this double bottom, we have the neckline. I just waited for the break and the retest. And I plotted my counter trend line. I think that was on daily time frame. I plotted it somehow. So when the trade actually broke the counter trend line, I think I entered it somewhere around here and I placed my stop loss here. And ever since then, the trade was moving so excuse me, so nicely till we eventually hit our full take profit. Though it took days, yes, it took days. This is when we entered it and we took our take profit somewhere around here. So this is why I normally say that the 0.27 extension is used to judge our overall TP. And let me show you here. Okay, so this was the retracement I caught. Okay, this was it here. This was it here, right? So the trade came into our fib support level. I entered it, and this is our 0.27 extension, which I said is usually used to mark our full take profit. All you just need to do is to bring out this your horizontal ray place it on top of that 0.27 extension line and click on it just to leave it. You have something like this. So you can now delete the fib retracement tool. So just anywhere you see the green line, it indicates your what, your profit. And what actually happened? What happened is that what we eventually took our full take profit, and immediately we took our take profit. What happened? The trade just started coming down, like just started coming down. So ever since then, I was just out of Bitcoin. I was just watching on my own. Nothing to do since I haven't seen what actually trade. So of recently, or let me say yesterday or today, I observed that BTC came back to that place where we actually had our first entry, almost to that place, right? So why has BTC been dropping here? The only thing I did was what was just same technical analysis. All right. So this was the last low, the recent low we had on Bitcoin. This was the recent low and this was the recent high, of course. Let me just remove this green line since we have used it already to avoid any confusion. So I just brought out my Fibonacci to try to construct it from this recent low to the recent high. But I can say that this is not working, of course. Like it is already way past our fib support or whatever. So I did not use this one to determine the recent low to the recent high. So I brought it down here. This same place that we used to judge our retracement there when we wanted to enter this our first trade is still the same place I used to judge our retracement to this recent high here, and we can see that the trade is currently in the fib support level. All right, the fib support zone, like it did in the first time. It is almost in the same price level, right? So I just feel like, okay, since we are technical traders, and history do repeat itself. So what I just feel like doing on this Bitcoin for now is, after waiting for over a month plus or whatever, now I had no analysis on BTC. So at least finally I can see something to say. So I'll just go to 4 hour and I'll be waiting for what happened in the past. If it is going to give me this double bottom pattern we had in the past year, maybe on 4 hour or on daily, or something like an inverse head and shoulder, just to commit to me that, yeah, BTC wants to continue its uptrend. But without missing a confirmation like such, forget it. I'm not going to be entering the BTC buy, because the crypto market can be really, really tricky. The crypto market can be very, very tricky, especially if you are not a fully dedicated crypto trader. I'm a forex trader actually, and the only crypto instrument I trade happens to be this Bitcoin. All right, it happens to be this Bitcoin only. I don't trade Ethereum, I don't trade Solana, I don't trade Doge, I don't trade whatever. Just Bitcoin is the only crypto instrument I trade. So back to what we were saying. So only if I can see a clear confirmation like we had in the past, maybe like a double bottom like this on 4 hour, or we have an inverse head and shoulder, any pattern any clear pattern that is committing to me that yes, this thing actually wants to continue, or like it is ready to move to the upside, that's when I'll be buying. Okay, that is when I will be buying BTC. But without anything of such, trust me, I'm not in, right? I'm not in on BTC. So I have to see something as clear as this double bottom. I need to wait for the break and retest of the neckline of whatever chart pattern is going to form. It could be this same double bottom, and it could be inverse head and shoulder. But any pattern that belongs to the buyers, it is either double bottom, triple bottom, or what, or inverse head and shoulder. These are the patterns that belongs to the buyer. So this is the only confluence we are having on BTC. The only instance we are going to be entering BTC by, it is what I have explained to you. Anything aside that, anything out of that, trust me, I'm not going to be entering it. And since I'm not entering it, I would advise you as well not to enter it. Please, okay? Not to enter it. Now we've analyzed DXY, of course. We've analyzed USDCHF. We've analyzed Bitcoin. I thought the today is going to be interesting because we are having analysis on almost all our peers. What else should we actually talk about? Thanks. Now I have two more pairs to analyze for you guys before we come to an end of today's chat time episode 3. But please, before we move into the next ones we are going to be analyzing, just like I've always been saying, please, as I'm supporting you in your trading career, so should you also be supporting me. Let's help each other, right? And what you can do by helping me is to what, always join the channel, subscribe to the YouTube channel, you know, click on the like button, turn on the notification bell, always use the comment section like I do say to you guys. Please let's get this our channel to a very wider and a broader audience. Okay, together let's make it real and let's make it happen. Okay, let's make it happen. So once again, I'm going to tell you that what, please subscribe to the YouTube channel and the rest of our social medias. We have a TikTok, we have Instagram, yeah, we have channel on Twitter as well. Yeah. So please subscribe to all the channels, guys. Subscribe to all the channels. So thank you, and let's move on. All right. So which other ones I'm going to talk about? Which other one should we analyze? Which one should we analyze? Nothing on this one. I've done this. I've done this. Yeah, good. It's good. You know, gold is interesting, right? Gold is interesting. And if or any let me say anytime I analyze and anybody is trying to go against what I have analyzed here, I don't know what's going to be your fate. Okay? If I analyze anything and you try to go against it, I don't know what is going to be your fate. Okay? If we take a good look at gold, and we remember what we talked about gold last week, okay? We said that gold is divided into two ways, right? It could either blow to the upside or it could ever what? It could either come to the downside. And I gave you the instances where it could go to the upside or where it could what come to the down side. So currently for this week, we see that we have nothing much, nothing significant on gold, right? Nothing really significant on gold. However, during the week, I was watching it as well. It was looking like this double bottom wants to hold. It was looking like double bottom wants to hold, and you see that I have a counter trend line plotted just in case we are going to, just in case it is the double bottom that wants to actually um, um go for the gold. Okay, what's wrong with network? Just in case it is the double bottom that actually wants to happen. But you see, it was like a fake out of that counter trend line for the uptrend. You see, it was like a fake out. Though anybody who had bought at this fake out of this counter trend line, his or her stop loss should be below here, of course. If you had bought here, I think this was the first candle that broke out, right? If you had bought there, then your stop loss should be below this recent low. I think I'm going to do a video that talks about how to properly place your stop loss and your take profit, because I realize that some of us, especially the newbies, do place their stop loss and their take profits in the wrong way. Okay, you need to understand that stop loss placement is not judged by number of pips. Okay, so I'll talk about that later, just like I said. So your stop loss should be somewhere around here, of course. You can see below the recent low. But you will have been panic now because this trade is in a loss. Okay. However, me, I cannot tell you that maybe you are going to go back in profit or not. Because for me to actually enter a trade, if I'm going to enter this buy trade, I need a like a fully erect bullish engulfing candle outside closing above this counter trend line, a bullish engulfing candle closing above this counter trend line before I can enter the buy on gold. And I said it last week that I'm kind of supporting more of downside of gold more than the upside. It is a 60-40, right? It is a 60-40. So I just felt like gold is going to commit to the downside more than the upside. However, I don't know. If I'm going to sell, I gave you the instances where we are what we are allowed to sell, not until any candle close below here before we are allowed to what? Before we are allowed to sell. What's happening? What's wrong with network? Network is disturbing us. What is going on? Okay, before we are allowed to sell. Okay, not until sorry for that, not sorry about that. Not until any candle close below this zone here before we are allowed to sell. And if we are going to buy, I give you an instances whereby I need a what a bullish engulfing candle closing above this. But what we are having now is just like a mess. I don't even know, it's just like a mess. If I'm going to enter for a buy on this good, I would rather control my counter trend line like this. Okay, and I'll wait for a what a bullish engulfing candle closing like so. Bullish engulfing candle. I look forward to buy. My stop loss comes here and my take profit goes to where? The next psychological number, which is 4,500. And if we are selling, the conditions for selling are in our last video. So just watch it. You are going to get the full details for the sell and the buy on gold. So we have no much analysis on gold this week. We are still holding on to what we said in our last chat time episode. So the very last one we are going to be analyzing here that I think I saw like an opportunity on is US 100. Yeah, NAS 100, right? This is another pair that I think I saw an opportunity on. Let me take us to daily time frame, right? So actually there is not much thing here, but if you take a look at it in the past, I already make money from trading this pair. But this I think this thing gave me 1:8, the risk to reward. Yes, you can see 1:8.18, but at least let's say 8. Okay, meaning if you are risking like $20, you'll be making around how much here? I don't know. If you are risking $50, you're making around, is that not $400, I guess. If you are risking $100, you're making around $800. You can see how huge it is. Like this is how I trade normally. This is how I trade. This is how I love to trade. So the opportunity I saw on this NAS 100 is just a very simple technical analysis. A very simple technical analysis. All I did was to bring out my few retracements because this thing has been going down since when now? Since God knows, since 29th of October, and this is 21st of November. That is over 2 weeks, I guess. It's about 2 weeks, right? 1, 2, 3 weeks. Yeah, 3 weeks. Imagine. So I just felt like, why has this thing been coming down? It might be that okay. After I hit my own full TP, you can see it's good. It still blow up to the upside. Okay, but me, I don't have entry on it yet. Then, so I have entry on it now. And the entry I have on it now is just like I just feel like let me take this thing might be coming for a retracement. So how about if I take it on daily time frame, please? I love retracement on weekly or daily time frame. I don't trust retracement on 4 hour. I don't even like 4 hour pullbacks. I don't like 4 hour pullback. So whenever I enter a trade, like I enter a trade now, and it's already moving in profit. So I feel like maybe I want to add another position. What is going to confirm my entry? It is either a daily time frame pullback, like that is retracement, or what, or a break and retest of a minor zone, right? Break and retest of a minor zone. So this is we are on daily time frame, and if I can just plot my Fibonacci from the recent low to the recent high, we are going to see that this trade is still in our fib support level. Let me remove this green bar here. I've already used it already, so it will not confuse us. I just remove it like this. We see that the trade is still in our fib support level. So there's possibility that this week about to open, you might start seeing uptrend. You might start seeing what upward movement on this pair. If I just construct my counter like so. Let me go to 4 hour because I like executing my trades on 4 hour. Okay, so where are we going to put as our take profit? Let me go back to daily time frame. Like I said, the 0.27 extension is what we usually use to judge our full take profit. So let me take the retracement back. Sorry, plot it like this. Recent low to the recent high. So this is our 0.27 extension. Let's bring out our horizontal ray, put it on it. We have marked it out, then we can now remove this one. Cool. Very, very cool. So now we are going to be having two take profits. The first take profit is going to be the place the trade got to before it started its retracement. It is just like a resistance zone. Okay, it is a resistance zone. So you have to put your first take profit there because trade can get back there and started dropping back. It happens really, really well. So when the trade got here, we are going to close some percentage, move stop loss to break even, or move stop loss past break even, just to secure some more profit to yourself. And what we have our full TP to be what to be somewhere here. Okay, to be somewhere here. So what is our risk to the reward on this trade? Actually, me, I might not enter this trade, and if I'm not going to enter this trade, why? This is why is because if this pair just come like this, okay, It will be that my stop loss has to be somewhere here, which is not possible unless we can have something like this. Let's say it goes like this, goes like this, goes like this, goes like this. Then we have a what? We have a break. We have a bullish engulfing candle break like this and close above that counter trend line. Then I can be looking forward to what, to enter the buy on this trade because my stop loss is going to be below the recent low. My entry is here. My stop loss, this is the recent low. So below the recent low has to be here. Let me zoom very well. So below the recent low has to be here. And my full take profit goes to what? Goes to this green bar here. So in fact I can't even enter it even this one like this because the risk to reward is 1 ratio 2.75. It is not up to my risk to reward standard. Meaning that if I see an opportunity like this, I might, if I'm not going to enter it safe because the risk to reward ratio is not up to what? Is not up to 3. I'm not going to enter this trade. However, let's see what happens. You might, at the end of the day, you might have a what, a 1 to 3 risk to reward ratio. So guys, we have come to the end of today's chart time episode 3. We had analysis on DXY, which is the dollar index. We analyzed Bitcoin. We analyze, finally we have an analysis on Bitcoin. We analyzed Bitcoin. We analyzed gold. We talked about what again? This NAS100 and which one? I think that's all. So we have come to the end of today's chat time episode. But before I finally end this, let me quickly give you an update on GBP USD. We analyzed this pair last week, right? We analyzed this pair last week, and I said I was going to enter an extra position, and I did already. You can see this trade. I told you that we have, this was my first entry. I showed you guys that we had a break and retest, and I showed you what this green bar is there for. And I told you I'm going to be adding another position if you break this counter trend line. And indeed, we broke the counter trend line, and I entered the trade. And I told you that this green line here is going to be my first take profit for my second entry, for my second position, and of course it is going to be what, my first take profit, of course. So however, you can say obviously that this what is it called, this trade is still in a minor loss. However, don't panic. If you are the trader that also entered this trade with me, do not panic yet, okay? Do not panic yet. We don't have much to say on this GBPUSD. I just want to update you. It's just like an update. All right. So we entered it. It is in a minor loss. I can see it. No panic. Zero panic. This is what it's going to drop to the downside. It is going to drop to the downside. However, the more reason why I feel like I should update you on GPUS is because the DXY, that is the USD, is in a short term bullish trend. And we don't know. Maybe it is when this UPUSD goes to this trend line here. That is when the DXY would have also got into that major zone. Anything can happen. So if you enter this trade with me, you're watching the DXY, easy to correlate this UPUSD to know what is going to happen. But for now, zero panic. Do not panic. So thank you guys for staying much to the very end of this video. We have come to the end of today's start time episode. I will see you guys same channel, same location, same place, same me, which is MJ Forex, the host of Chance Time episode. Hopefully to see you guys next week, and I wish you a profitable trade ahead. So stay safe guys, take care, bye, and I love you. Bye.